Hello and good morning, listeners. Welcome back to Almus Market Mornings with Shikhar Garg. And we begin the week with the latest global financial updates. The job numbers, which created quite a bit of buzz last week, actually came lower than expected. Now, although there was the ADP numbers which showed quite high, the data update, but it is the market participants which are realizing now the kind of volatility the ADP numbers are having and have started following the NFP more closely. Unemployment was also slightly high for US, reporting 3.7% against the expected 3.6%. Even Canada released a higher unemployment rate, but the overall change in employment was also higher. So there's some bit of a mixed picture going out for Canada as well. This week, we have the Indian and the US inflation numbers to be expected amongst the major updates. So, JK, I'd like to know what do you think and how would the currency markets fare this week?
Good morning, Shikhar. Yeah, I think this is the volatility just shot up in the last 2 days of the market because of conflicting numbers between the ADP and also the actual government release of job numbers. And increasingly, investors are realizing that ADP is not reliable, and there is always a big divergence between the ADP number and the BLS number on the jobs. There were months when ADP numbers were much higher, and there were times when BLS numbers were higher. So I think, but all said and done, the bond market had a huge volatility because the uh, 2-year yield, for instance, which had been at 4.94 before ADP data, went as high as 5.12 and now back at 4.95. And at the same time, 10-year yield has actually stayed higher. In fact, after the BLS data also, it has gone up by 2 basis points. So basically, the curve has steepened to 90 basis points now from a high of 110 basis points. But if you look at the data itself, the jobless rate was lower at 3.6%. Wage inflation was higher. The last month's number being revised higher, and the year-on-year number, maintained at higher level. So that is not giving any comfort to Fed, and Fed, I think, no change in the Fed stance for July meeting. 90% probability is being mentioned on the rate hike. So that actually supports the sentiment on the dollar. However, if you look at the dollar itself, again, the volatility in the dollar was nowhere less than what we saw in the yields, because we had euro went down as low as 1.0860 and then bounced very strongly by 0.8% after the jobs data. And in fact, I would say the dollar index really did not make big gains, despite all the numbers looking good on the Thursday, including ISM services. But it was quick to fall when the job numbers came lower than expected. So we are at 102.25, and it's actually dollar index is completing a very uh, significant pattern on the daily charts or the weekly charts also, which if the break of 101.80 is a pointer to break towards move towards 100.50. So just keep an eye on the dollar index, and that has not been actually correlated with any of the data either from Europe or on the US. It's just going by the flow, I think. Surprise mover was dollar yen, because we went not only broke 143, but also went as low as 142. And there is some two reasons are there. One is the risk off sentiment, and then there is a sell off in the US long term bonds, which is like where the Japanese investors have earlier been investing a lot, and even the Japanese 10-year yields have gone to 0.44, the yield curve cap being at 0.50. So Japanese and then there was unwinding of carry trades against several currencies and the asset classes. So that is the reason why the dollar yen is down. So important, or rather, a very significant meeting on Japanese policy coming up in July. As we mentioned in our earlier update, there was a deputy governor in the Japanese central bank, who said that we need to adopt a flexible approach for the curve control policy. But all said, GBP is on its own course, running away to the upside, because there's a constant upgrade to the final, or the peak rate of Bank of England, because their inflation is quite high. But the rider here is that market talk that in the next few months you will have all the mortgages which were taken at a lower rate will come up for renewal, and that is when the hit to consumption will happen. So we really need to wait and see how on the UK pound how far this goes. It's already looking very overbought, but no one is prepared to sell it as it. On the Chinese one, yes, some sort of a topping formation on the technical chart. So we have seen consistent failures above 7.27 now. Next bout of negative or soft news on the US economy, we could see 7.20 breaking, and the Bank of China, or the central bank, has already fixed it below 7.20 today. Coming to our own rupee, yes, I think people are still, reconciling themselves with the sudden burst of volatility in the INR, and what was looking super strong in the beginning of the week has, weakened a lot during the week, almost 1% weakness from if you capture the low and the high, and that's actually unnerved some of the unhedged importers, and that is the reason why you saw, there was good demand even at 82, 60, 70 also on Friday. Of course, you move up in US yields, and the dollar index slightly going up also supported the prices. Important thing for me was that the PSU banks were buying QN above 80 to 50. That actually changed the sentiment. With the weaker number in US and also dollar index slightly correcting, INR can retrace a bit, but I think it's going to be very slow. Because a lot of importers will be looking to buy on a dip to 80 to 50, and also the premiums have broken even lower than 1 rupee 30 paisa, and that is not a anything encouraging for exporters to come and hedge. On the contrary, importers will be happy even if they get 80 to 40 plus a premium which is at 1.52% to hedge for themselves. So the USD-INR is not going to get a major sell-off for the time being. Then we should be in a range between 40 and 85 for the time being, and any break of 40 can see 80 to 10 only tested, but nothing beyond that I'm seeing right now. Thank you.
Okay, JK, that was pretty good. And yes, folks, we've seen some bit of slight correction in the short-term yields for the US, but the longer tenor stayed higher, thereby reducing the kind of inversion spread that we were seeing on the yield curve. On the central bank action side, the FOMC for the month of July is being discounted as the 90% probability of 25 basis point hike. But the question is what the FOMC will do in the coming months meeting. The break of 101.80 101.80 for the dollar index is keenly watched, as it can bring in much deeper move for the dollar index, thereby pushing the majors on the higher side. For the UK economy, as DK mentioned, the mortgage renewal in the coming months should provide the kind of consumption the economy is having, and overall give some sort of sense on the anticipated growth for the economy. For the domestic markets, there was quite significant move for the USD-INR pair. We've seen it move from almost 1% from the lower levels seen at the beginning of the week to the high by the closing of the week. And which was what was most surprising was the buying by the PSU banks above even above 82 half levels. The forward premiums further went down, which again is beneficial for the buyers as against the exporters. Uh, Before we close, folks, there's one very good update that we are coming up with. There's uh, an session of Almus coming tomorrow in the evening, which I'd like you to join because it's going to be a very interesting session on the gold trends. We have Mr. Yashwant Rao and Mr. Jaideep Banerjee, who will be coming and speaking along with uh, Jairam sir to give us more updates on what should we be expecting on the gold and what are the kind of trends that are anticipated in the coming days. So, folks, it's gonna be a cracking session, and I hope you guys join it for your insights. That's it for today, folks. Thank you so much, and we shall come back again tomorrow.